We're going to make this a little more casual since this is one of the last sessions. We're very thankful that you're all here. My name is Adrian Sheppard. I'm the Managing Director at Transcend. We have actually a very, very strong panel. And we're going to front-load the conversation a little bit because one of the panelists, Adam, has to leave a little early to catch a flight. Apologies for that. But we will have time for Q&A. Our topic is discovering the next Web3 startups. And each of the people up here, in some form or fashion, is focused on deploying capital into the startup ecosystem, Web3, Web2 even in some cases. If you don't mind, we'd love to just do introductions. We'll go down the line, starting first with Adrian from Newman Capital.
Sure. Hi, my name is Adrian. I'm the founder of Newman Capital. So Newman Capital is a full stack and proprietary investment firm. We invest across stages. We do private equities, Web3, and art and collectibles. But particularly for Web3, our interest has been quite broad across the years. We start off with tons of interest in DeFi because of my personal background in finance, and we do have a strong interest now in the publishing side of gaming, the financialization, NFT side as well. So I'm keen to discuss with the panelists on how the space will evolve over time.
And Rico.
Yes, it's Pang Yin Zhang, name on my ID card. You can call me Rico, it's easier for you to remember. From SANCTUM Global Ventures. It's a venture fund started by me and my partner Dan Centio from Singapore, is also an OG in this space for 12 years. We only invest into infrastructure and protocol-based projects, as well as right now we're looking at infrastructures that can resolve some of the problems and challenges in the Web3. We also invest into metaverse solutions, and right now we have a different fund as well called Dreams Maker. Yes, it's a new fund because it's specialized in investing in GameFi, NFTs, platforms, marketplace, as well as metaverse projects.
Hi, I'm Adam. I'm one of the founders of Standard Crypto. We're an early-stage crypto investment firm in San Francisco, and we write checks from 1 million to 100 million US.
Yeah, it's tough to follow up. Hey everyone, Dan. I lead investments at YGGC, and we write checks decidedly smaller than that. But we invest more heavily in NFTs, so.
Awesome, thanks. And as I mentioned, I'm Managing Director at Transcend, which is an early stage gaming fund. We thought we'd kind of structure the conversation just starting with where we are today, right? The subject matter of the conference is the future has arrived. So what better way to start with, what is the market today? What are we seeing? What are these people seeing in the marketplace? And then where do we see it going? What are we excited about? What would we really like to see more from the market? So in that context, perhaps I'll swing it towards Adam, but, as you look at if you look at CoinGecko, for example, CoinMarketCap is down, about 60%, 66% to about $1 trillion as of like an hour ago. And we're starting to see unhealthy leverage be removed from the system, like with Terra or Voyager Digital or some of these things. So people that haven't gone through a cycle before like this might be quite nervous about what's happening, but it feels like there's hope and there's opportunity. What do you think?
Yeah, I mean, look, there's certainly opportunity. I think that's why we're all here, and that's why we have a very full crowd as well. But jokes aside, I think the first step of what happened was that unhealthy leverage was removed, and I think the other really big thing from this cycle was that people are better understanding the risks of how yield is generated in crypto. I think people were treating things that should never have been treated as a risk-free rate I think, right, people didn't understand leverage which was in play somewhat in secret, right? Whether that's something like, STE from Lido and how people leveraged up with that, or even some of the sort of balance sheet investing that was treated as fixed income. But I think in terms of what we want to see in the future, anytime there's a new cycle in crypto, there's an opportunity to reinvent the space, right? If you think about kind of earlier waves, sometimes it's something really simple, right? Back in 16 and 18 and 20, people said, hey, it's not just about raising money, ICOs, there's now ways to have financial primitives. Or there's a huge NFT wave, and we're still really excited about NFTs, but I think people have now understood that it's not just pictures, it's not just art. It could be, gaming assets. It could be ways to feel closer to celebrities or closer to brands. And I think what we're really excited about in this next wave is, one, gaming, but gaming done in a way where mechanics are a first-order feature, and it's not just about purely the existence of gaming finance, but people playing games because they're fun. Right? Let's see a crypto game kill Candy Crush and forget about the mechanics of sort of the economics of it. The second piece that we're really excited about, which I think is really timely with what's going on with Twitter, is just social networking broadly. Let's see social networks be reimagined in a more crypto-native way, where there's incentivization and curation happening on chain.
That's great, and that's great. And we segued into opportunity. What do you folks think? Perhaps Rico, do you think we're at the bottom? Do you think now is the time to start looking for those gems of opportunity that Adam just dropped? What do you think?
Well, from my point of view, from my partner's point of view, this is a cycle that we have been fourth or fifth cycle, whatever I call it, when it started. Then the cycle is always opportunity to go shopping. I think most of us are busy shopping now, buying out, and I think FTX and many of the funds are doing the same. So from the capital market, it is awesome time. In the traditional financial world as well, people are buying as well. So I think it's actually a good time for people with capitals to accumulate and hold. I think it's not financial advice, obviously, but this is what the VC perspective is. At the same time, it's a time where big fish eat small fishes in the market, where you see good projects taking over and buying out other projects, and reorganizing the structures and bringing the project to the next level. So it's a time to root as well. It is time. The next halving is in 2024, with around 500 days left before we can see another huge bull run. That's what the Bitcoin maximalists will tell you, and I think that is aligned with what I believe with the crypto market. Many of the people who already done shopping will go holiday for a year or two until the next bull run comes out, and they will start doing some selling and accumulate wealth again. So I think from VC's point of view, we are looking at more entrepreneurs and more talent coming to a space to build and disrupt. We love disruptions, and we need disruptions in our blockchain ecosystem, and that is the spirit that we hope to see in the young souls that are young and they are full of energy to be able to innovate and commercialize the tech. So from a tech point of view, Web3 is going to be a long play for the next 5 years to 10 years. We don't have a blockchain that can support any Web3 infrastructure yet, so to speak. So many of them are still building. And what are you talking about? We still want to see real adoptions. When can we see a blockchain that can host games fully on Web3? What
do you mean by fully on Web3? I'll push back on that. Right? Let's talk about what does that mean?
Yeah. So I would say that, look, if we want to put a game on a Web3, most of us are still on Web2. It's still centralized. So we want to put on a Web3 ecosystem, and we're looking at Web3 startup. What are we really building at? They can't put it on AWS or a group of AWS servers and call it a Web3, and it's not on blockchain at the moment.
I think it brings up an interesting question, right, of what does it mean to be on Web3? I think if you think about Web3 as a payment rail, it's quite possible to be on Web3 today. But it's sort of like saying, Farmville is not a game that's fully on credit card because they also build on AWS. Right? So it's an interesting distinction to make, and I think obviously Ethereum is where it is today, and there's roll-ups on top, and there's side chains, and lots of different approaches to scaling. But I think I would push back and say that you actually could do that today, but it's just about framing where you draw the boundary.
So are you saying that we already have Web3 readiness now?
Yeah, absolutely.
So if that's the case, what sort of Web3 startup are we looking at? What sort of Web3 startups are we looking at to invest and incubate?
Sure. Well, so the two categories I talked about earlier, right, are gaming and social networks, right? And I think that it's really just a question of what you put on chain and what you don't put on chain, right? It's, imagine pick a complicated game like StarCraft or something. You're probably not going to put the full state of StarCraft onto the blockchain. But at the same time, you look at the sort of existing pattern today, you're not running that entire game through the payment network, right? People buy the license. There's different types of cosmetic assets, different types of in-game assets in each different type of game, and there's just a little bit more modularity.
So we're listening to curious to get Dan to jump in here, just to get back on this conversation since it's so heavily on games.
I think it's just I hate when folks say like, oh, something is or isn't Web3, because that means it's like defining Web3 as this one set like instance, and it only can be applied in this one way. When if something doesn't need to be on Web3, it shouldn't be on Web3, right? Like certain portions of a game that benefit from Web3 should 100% be on Web3. But if there's no reason to, and it doesn't get anything out of it because it's not beneficial to the players, there's no shared value creation between the studio and the ecosystem and the gamer, then why put it on Web3 or why put everything on chain if it doesn't have to be on chain? Some things are more efficient not on chain, and so I think it's selectively choosing when and where and how that moniker is applied. So maybe I'm sitting somewhere in between a little bit of both of you. I don't think there's any really great solution in market right now, at least not one that doesn't go down twice a week. No Solana folks here, right? Oh, I shouldn't have said that. But I do think that there are enough solutions that can provide the bulk of the value that Web3 aims to bring to players to market right now, which I think comes into digital asset rights, like actually owning some of the value that you create in games.
Just to kind of abstract what these guys just went through, and we're purposefully talking about things, trying to create more dialogue amongst the panel. But one of the things that, Dan, you and I were talking about earlier today is that this market pressure that we're seeing, it's an opportunity for entrepreneurs to really look at what are they building, why are they building it, and what is the path to get the best outcome against that execution strategy. And Rico, you touched on it as well, but kind of what these guys are traversing right now is exactly that. And I don't know, Adrian, if you would agree, but it feels like now is kind of a moment where people should be getting back to basics, really thinking about where innovation should be built, why it should be built, and who the customer is. Would you agree?
I think it's really time to, I think entrepreneurs should be constantly reflecting on that, on innovation as well. It's just now we are in a more bearish market. I can't say it's literally the bear market, but going back to before answering these questions, going back to previous questions on the current market, I'm going to talk about Web2 and Web3, but I think the market is in a stage of convergence. That is where there's convergent pricing between traditional or crypto market, because more institutional players comes in, futures market reflect that. The convergence among protocols and layer ones, I personally have a doubt on so much layer 1 and layer 2 happening, and how does the ETH merge coming up impact all the infrastructures plays out there. Should we be going for general purpose blockchain like ETH and Solana itself, and more purpose-driven blockchain like gaming blockchain, Flow, and anything coming else up? I think the answer, convergence around acquisitions, the Uniswap play around NFT and vice versa. Whether NFT players can be DeFi play, is a convergence around the mechanisms themselves. So that brings to the second question that you asked in terms of innovations. I think Web3 entrepreneurs have to, now the space is much more mature than what we talked about in 2017, ICO stage. You create a messenger app, you think about that, really narrow-minded. It's not wrong to be narrow-minded at the beginning, but you have to think about broader picture. Say as Magic Eden that's going on ETH, taking on Solana at the beginning, but it's going to take on ETH. And we will be surprised I would be surprised if entrepreneurs are not thinking outside the box, creating a games without any considerations around DeFi. Are you going to create a DEX within or outside the games to trade the weapons? Something along the line is easy to think about it. I personally have been debating, really, I think I mentioned with some of you on the gaming sector, why does it make sense to have around the X to earn, play to earn components? Should it be still there several years later? Is Ponzi wrong? I personally don't think Ponzi is wrong. It's just, I think I mentioned that Adam yesterday we had a debate around that, around Ponzi's definition. But there's a lot to talk about. I'll leave for someone else to continue the conversation.
Yeah, maybe please Dan again. We're talking about evolving game designs and game features and.
Yeah, look, I mean, the past year and a half has been fraught with a lot of maybe mediocre to failed studios that rushed a product to market or took a product that they'd already shelved and decided like, hey, I can adopt Web3 and all of a sudden, cool, we'll monetize something was non-monetizable or failed to monetize in Web2. And so we saw a lack of quality content hitting the market, and when it did hit the market, nothing about the experience was very crypto native. And so you had kind of like a mediocre of both worlds, which then created, a perfect storm of when you throw a Ponzi scheme on top, it creates these bad habits in this first generation of like Web3 gaming users that have this expectation now of like, well, the only thing you can do in like GameFi is to earn, right? Like I'm just here for the earnings, and if there is no earnings, I won't stay, even if the gameplay is enjoyable. And so I think that's a habit that we need to break now. And it doesn't mean that like play to earn or X to earn isn't viable. It doesn't mean that like using the Ponzi style like marketing tactic in the first few months and then pivoting out of it isn't also a viable go-to-market strategy. I think it's just time to like focus on what users in general would want out of a game, whether they're Web3 or Web2 users, and then provide the experience that you think would onboard and keep a majority of the community happy, satisfied. And if that includes certain elements that allow earnings, whether it's through value creation, content creation, like UGC, or some sort of farming because there's others that are willing to pay for the results of your effort and time you put into game, then great. There can be value extraction if there's value input. But we need to move away from that being the primary and only driver or motivation for players, and really come down to like, let's just build a good experience like games have been doing for the past 20 years. Like I would argue that World of Warcraft was GameFi. You could sell gold on eBay and get paid through PayPal, which I was on the other side of that. I paid for it because I didn't have time to farm, and I wanted a raid, so I'd buy gold to get consumables so I could go raid. It was there. I didn't call it GameFi. I still don't call it GameFi now. It's just gaming, and all Web3 does is lowers the friction to do exactly what I want to do and play exactly how I want to play.
So I think sorry, go ahead.
No, I was actually going to ask you a question from your Kabam days, right? Like, how do you think about the role of sort of the monetary flow in these games, right? Because Kabam, I mean, the whole model is in the reverse, right? You pay to play the game. You don't get paid to play the game.
I appreciate the question. So, like, my background, just quick background, I've worked on games, about 60 total. 3 were global #1 top grossing games, about 5 or 6 billion in revenue associated with the titles I've worked on. I've done every genre, every platform, every audience, every distribution model, every business model for games over the last 20 years. So I've done packaged goods and also free-to-play. It was kind of interesting moving into free-to-play in the West very early, which was very late compared to Korea or China or Japan for that matter. The model of free-to-play it's an interesting one. I actually think it's going away, just to be somewhat controversial. Like, I'm actually a huge believer in aligning the audience with the business model, and free-to-play implicitly creates barriers or walls to engagement to get people to spend. One of the things that I think is exciting in the Web2 side for gaming is subscription-based services or things that you pay for in advance. That is incredible because it makes the job of the business running that service all about retaining a subscriber. So the way that you keep people in the game is you build a better game, or you create more diverse and inclusive content. On the Web3 side, it can go even further though, where you can actually fund projects that you believe in, buy assets within those games that you personally value, put your time and effort into those experiences to make them more valuable or rare, and then choose how long you want to be a part of that ecosystem or that franchise. And, I'm kind of a believer in it completely inverting itself. What I think is, and I think that promise kind of applies more generally to Web3. We're not just talking about, these guys are not just investing in games, although there's definitely a heavy influence there. One of the meta things I kind of say about what you're hearing from each of the investors now, I don't know if this is true, I suspect it is. One of the questions that's definitely emerged since the market has slowed down for me as I talk to prospective companies is, are you still investing in founders? Are you still investing in startup ideas? And it's kind of I think it's a telling question. Like there's definitely, for at least my personal observation, there's definitely a moment in time. We've been steady investing, and I think a lot of the folks here as well. But there were other VC funds that we know, that we talk to, that we support on deals that did stop investing. And it's interesting to contemplate what you're hearing, I think, across this panel is that there are very different views of what the future looks like, right? And whether it's Rico or Adam or Dan or Adrian, each has like a very strong view of what's next, right? So perhaps we could talk a little bit about what you folks are investing in, and perhaps a deal that you've done recently that you're particularly proud of or excited about. I think that would be really telling for the audience.
You're looking at me.
Sure, I was go first.
Yes, it is.
You gotta read first. So yeah, after you.
Sure. I mean, I think really the two categories that we're the most excited about right now are both social networks and games, and we're going to have a lot to share on that soon.
Oh, wow. Exciting. That's a teaser. Someone in the audience is going to get lucky.
Look under your chair as an investment.
So from my side, my partner and myself, we decided to take a diversification to invest into other funds of funds that specialize in different cohort because they are expert and they are captain of the crowd. So I think that's where it opens up more diversification and quality of the investment, same time on due diligence as well. And we follow through, and if proven that they've done a good job in selection, we will also co-invest using our fund. So we actually double dip on leverage on the expertise of other VCs in the space, and we learn from them. And we focus a lot more on diversifying our time into incubation and acceleration, because we realize that we can keep on investing like what the Silicon Valley guys are doing, putting money into 1,000, 2,000 projects, but how many of them actually made it and survive in times like bearish market or economic downturn, and how many of them actually became unicorn or aracorn over time. So I think we diversify our time from that into incubation, where we continue the search to find talent and ideas that actually is disruptive. The Web3 that I was looking at is when they actually host, the data by more people that get involved in the Web3 economy, rather than someone owning a server, someone owning a database platform to host the data to start with. And that's where I see the whole decentralization of Web3 and contributing to a stack hash power towards the network that can actually scale, and at the same time having the interoperability towards different blockchain and supporting that, rather than trying to balance things out and creating different solutions to, sustain the whole ecosystem. I think that's where we are looking at a very high level of Web3, where that's the Web3 that we dream on the wish list. And where are we at now, from here to there? What are we doing as an industry our top leaders from around the world, what are we incubating, and how can we come together to actually focus on building this at this stage. And before we go to the next stage, it's about timing. That we believe in the whole panel that it's about timing. It's about the right thing at the right time, and also the whole sustainability of the whole ecosystem. Do we have enough projects, to actually be invested by so much funds? All of us are looking for a good deal. Everyone wants to go into a seed round, right? How much seed round do we have in terms of location? So when do we need to invest into a Series A or Series B or even carry forward round to support the project? And what sort of talent and skill set that the team need in different stages of building the business? I think those are things that I'm very keen to explore, and definitely ongoing searching for the right team to own these sort of things.
Just to echo that back, what I'm hearing is you are investing now, but you're looking for teams that have a very clear view of what they're building, when they'll deliver it, and whether that aligns with your view for how the market's evolving, and potentially a little bit on a longer time horizon. Adrian, are you investing now? Do you think there are opportunities out there?
Well, I'm definitely investing that I lose my job. So I think the first thing is we are agnostic to how we invest. So whether it is through primary market or secondary market, I think it's in general terms of funds split all the monies across primary market. It's always good to keep some percentage to buy the things that you thought is expensive, and now you shop around in the market. Whether it is, say, for example, we are quite explicit that we like uni, and we will probably do a DCA and buy uni with 90% discount, well, not 90, but 70% discount to previous all-time high. And what we like in the market, and I think in this bear market, we have to look for futures, kind of prepare for the next bull market and what we think we're going to be riding the wave. For us, it's nothing right or wrong. We like derivative market, and I'm not going to talk about how much should be on-chain, how much should be off-chain, but in general, we think that from a CEX to AMM model, which was the first half of the last bull market, and I think from the AMM on-chain, a part of it on-chain to do options or futures protocol was not a thing in the previous bull market and might be a thing in next bull market. So we did invest in one project just built on NEAR protocol recently. And the next one that we like is not essentially games, but gamified experience in a social context. And I'll explain that. I'm not a fan in investing in individual games because I'm not familiar with them, but a way to socialize with one another in a gamified approach in a Web3 way, whether it is, and alongside with the convergence of fashions, entertainment, really create the content in a digital way, and you can socialize either in the way of metaverse, in the way of just a messenger app, in something like recently we invested in an OnlyFans equivalent on Solana. That's something that we like. I think social is getting much more important and proven in the Web2 era. And the third one that we like seems like a lot of things that we are interested in, but which I'm debating as well is the decentralized creation of content of IPs, and that is something we are still debating because, for example, 5 artists come across together to create a content in a DAO or under a sub-DAO, how to distribute revenues, how to have a legality around the IP itself is something I think in the next bull market might have some interest there. So echoing on what I said earlier, I'm not a fan of investing in another L1 and L2 because I think that's going to be, the market is very ready for that. Existing L1 and L2 probably much more than the existing top 50 apps. And it doesn't make sense, and there'll be a convergence, whether there'll be convergence into ETH or Solana, or some of them might buy. I don't know, but I would probably take a bet on picking an average index buying of this L1 and L2 for top 10 to 20, but that's probably another strategy.
Then what are you excited
Keep
about?
it super short, man.
Yeah.
Actually, it's one of the projects that spoke on the panel. I think one of the execs is here. Mark, are you in the crowd? Okay, there we go. So we love looking at projects that solve either super upstream, the onboarding issue, or super downstream, like the off-ramp issue. And this specific project, M1 Network, is solving access, providing and solving access to content and games for the majority of the world's population that's gated by hardware through decentralized real-time cloud rendering solution that traditionally is very expensive. Like look at Google Stadia, or you look at GeForce Now, and it's 20, 30 euros a month to players that already can't afford hardware. Like it's a very high percentage of their discretionary income. But by putting things on chain and turning it into a mining network where there's no ecological operational fixed cost to maintain things, and decentralizing it and splitting it out amongst the mining network that can opt in or out using idle GPU power, etc. For the first time, the cost basis gets down to a point where we can then approach even further upstream the infrastructure providers like the telecoms and say, hey, you guys subsidize phones, you guys sometimes subsidize Netflix subscriptions or Spotify. Well, this is another huge demand driver for content and data on your infrastructure. Would you be willing to subsidize $1 a month in order to drive 3x the data demand through your infrastructure? And our suspicion that the answer is yes, and so that's one of our more exciting projects. I'll just leave it there.
That's good. Yeah, it's interesting kind of to think about some of the themes that you folks are touching on, because one message that I think comes through across every member of the panel is you don't necessarily want to see more of the same. And in fact, you want to see either access being expanded by innovation, or utility delivered at scale like a social network, or true value being delivered in the form of a service, whether it's financial or otherwise. One of the things that I feel as like just operating out of California is that like Asia, Southeast Asia is really the bleeding edge for a lot of the innovation. Like I think it's very appropriate that we're here under the banner of IVS talking about this. My personal view is that emerging markets is going to drive the next cycle of innovation. Do you guys share that view, or do you feel like it's going to come from everywhere all at once?
I'll start this first. I think it's market driven. I think that Southeast Asia is where most of the need is coming to. And the nature of the patterns are also very innovation and disruptive at the same time. They are very impact driven in a way that they actually solve problems to make things more sustainable in the long term. I think that's a very key element that we see this in Southeast Asia projects. It's not about making money and creating another billionaire. The goal is about how expensive is a problem is being solved by this venture and this unicorn, and then that's the value I define on the success on the value of the project. And every time you look into any due diligence of any that come to us, it's about the problem that they're solving and how expensive is this problem. And then that's the team has the capability to deliver that. If they do not, what needs to be empowered to them and adding value to this team. So I think that's where I see these startups in Southeast Asia, and surprisingly in other region in Africa region, I see a lot of similar disruptions coming out as well. A lot of models that work in that region can also be used in Southeast Asia. And there could be some tweaking of the market and cultural transitioning. So that's where I sit in the Middle East right now in Dubai, and looking at both sides and looking at deal flows coming through globally. And I still feel that there's a lot of things that the Southeast Asian market can offer.
I think a lot of it depends on the sector, right? I think if it's something like DeFi, which is global from day one, there isn't really such a concept as geography, right? There's not kind of Aave for the US and Aave for Africa and Aave for SEA. There's just Aave, right? And you laugh because it sounds ridiculous, but that shows how global it really is. Now, I think if it's something like on-ramps definitionally will be geographically dispersed, right? There will be on-ramps in specific emerging geographies. Gaming is also an interesting one. I think that gaming is often really cultural in nature. People like different games in different parts of the world. So I think when you think about gaming and social, like I mentioned earlier, those are two areas that we expect to look quite different.
And what do you think, Dan? Because YGG was almost pioneer in this concept.
Yeah, so I mean, that's actually why the entire DAO sub-DAO model was created, was because, like you mentioned, gamers are inherently local, right? A reflection of local pace, cultures, language, economic situation, etc. That's why McDonald's serves, beef in the U.S. but not in India. Fried chicken is the most popular thing, I think, here in China and here in Japan, but it's not even on the menu in the U.S. because tastes are different. But I see it as like, Web3 is the great equalizer of our time, and you're going to see a lot of innovation from the areas that are able to take advantage of that arbitrage of the value of their time. Whether that's value because now they're not constrained by local jurisdiction or even language, things are done via smart contracts. So whatever value they create into an ecosystem, they can extract out regardless of the language they speak, where they live, whatever currency they use. And now, this provides additional motivation because, well, that difference in value is probably more significant for areas like Southeast Asia, Africa, LATAM than maybe some of the Western countries where it's a great opportunity, there's some value here, but may not be as big of a difference from another option that I could be doing, right? And that's why I think you'll see a lot of the innovation come from these areas of where arbitrage is possible.
That's good. I just want to be mindful of time for Adam. I think he's dashing to the airport right now.
Yeah, no, you mentioned California earlier, so sadly I have to go back there. But
yeah,
thank you for having me.
And we'll keep going, but if everyone could just give a round of applause for Adam, I'd appreciate it. Thank you, Adam. Travel safe.
I'll see you.
And Adrian, I think you were about to say something, please.
Yeah, I was about to add on what Adam said in terms of DeFi being global. But I think from my perspective, I have a different take because I think DeFi is going to face a lot of regulations. So meaning that from now being a decentralized network like Uni or Aave, I feel like there's a middleware that has to be turned back more into a centralized way in the middle where it has to be Japanese, Korean, American kind of DeFi because of regulations kicking in until the space gone more mature and getting support from government that it can be completely decentralized. We all know that something like a Uni, to be honest, even though we like it, should not be operating without regulations, even though that's the essence of decentralization. Then another thing that I want to add on top of everyone is, in terms of looking at startups across the globe, I think in finance, gaming should be quite mimicking traditional space in terms of sector exposure. But it also, particularly in crypto, is around the flow of talents, where each area has its own talents, so it get more amazing startups there. So similar to several years ago when people flocked to Singapore from elsewhere in Asia and making Singapore a hub until MAS say something like Binance, you should go away. And people start to move towards Dubai. And that actually changed the dynamic of startup formations around the region, which is unseen in other spaces in general startups. So I feel like that will help venture capitalists to capitalize on this flow of talents that, I have to fly to Dubai quite a lot now. I have to travel to Dubai because of this talent formation or change in strategies. And now I don't go much to Singapore except looking to 049.
That's interesting. Yeah, those are excellent contributions, regulation and talent. If you wouldn't mind, Rico, I'd love to just ask for the group, because having been an operator and having had to talk to VCs about raising capital, when markets are soft like this, it can be very easy to lose confidence in your vision or to question whether you should evolve your strategy, change your strategy to match some of the things that we've talked about here, where it's very clear that each of these investors has a different view of what good looks like going forward. What would you recommend to teams that are fundraising or about to pursue a fundraise, whether it's their first or a latter round? Should they stick to their original vision? Should they test their vision? Should they start over? What do you think?
I think most important is, are they confident in the technology or the solution they have? And if we can really solve a problem, well, there must be value of that in any market. Could be a challenge in regulatory at times, especially I was speaking with some of the Japanese entrepreneurs. The concern around the regulations is quite different from what we have in other countries. So do not give up on that idea, because the same idea could be solving some other problems in other markets, and that's where we see a lot of shift of entrepreneurs in our ecosystem moving around different regions. I think the second thing is about understanding the direction of regulations. And I think Adrian mentioned that earlier on. Let's not, be driving through what is bad or what is good or what it should be. It's about, what the global trend is looking at and how is traditional financial market reacting to this disruption. And ultimately, the value of wealth in different regions is shifting as well. So I think where we're looking at the future of Web3, it's about creating the right adoption, and even in games, whether it is a DeFi play, the liquidity coming in, the participation of the players coming in. It's about how good is adoption strategy, which is why I think Dan and YG is doing a very good job in terms of looking at the root of the issues and investing in that into those of projects. So from the VC point of view, it's about balance in the whole ecosystem. Otherwise, something will crash. We will witness what happened to Celsius, and we have been all quite, surprised that this actually could happen at this time of the year where this could happen. But looking at what other VCs are looking, or other companies are looking over some of the assets, because look, they still have a value. Even though it's only 20-30 million range of value now, it still has a value because it's still a problem that they did run solving. So I think that's where I see entrepreneurs and startups should really take this opportunity in the bearish market to reevaluate, what they are looking to solve with their innovations and how disruptive can it be, and at the same time do the right adjustment so that the runway of the project can be sustainable for the next 2 years, for the next potential bullish market to come over. So I think it's a good time to actually review and also, refocus the attention to, building the technology, building the right thing, and continue the fundraise. I think a lot of VCs are still investing. They don't know where the fund's in. If you don't give them an opportunity to go into a good project, you might just buy some crypto, and just hodl, they will still make a good return. And which is why some of VCs stop investing into startups, because there's still risk in whether the startup will make it or not, rather than them can control and go into some assets that they invest into.
That's good. Dan, what's your take? I mean, you mentioned some projects in the past have tried to innovate and it didn't quite work, or perhaps they weren't able to execute because they rushed.
Yeah, I think the point of the advice I would give is just, take a look at the purpose for your project and figure out if that purpose is because it's organically crypto native, or it makes more sense in Web3 than it does in Web2, at least some part of it. And instead of forcing on solutions that sound catchy because it's in Web3, figure out, at the core of it, who benefits. Is it the community? Is it the developer? Is it the users? Is it because everything becomes more efficient? Or if there is a cost to this by putting it on chain, or does the benefits outweigh this like cost of lack of efficiency, et cetera? And then, once you figure that out, in a bear market, sometimes traction can be tough. Like total transaction volume, et cetera, is going to be lower than it will be in a bull market. But figure out where that first 1,000, 5,000, 10,000 die-hard users that can never live without whatever solution you're providing, whatever experience you're creating, and then they'll be there as your net promoters when the bull market returns. And so yeah, we've been focusing on a lot of these projects they seem kind of niche now, but we figure that they've pinpointed a very, very, maybe an even narrow sliver of a problem that's very serious, and it solves it very, very, very well, or provides a very, very good experience for a very small subset of individuals that we believe, given market conditions, it has the ability to expand very rapidly.
So it sounds like you're really advocating for people to really focus on something that.
We talked about this earlier. Like, do more on less, right? Like, focus your efforts on less things, but then go a mile deep on them, right? And just really solve someone's problem better than any other solution out there.
All right. Well, with that, we were asked to save some time for questions. Recognize there might not be questions. That's okay too. But I would love to field some questions for the group.
Hey guys, thanks for sharing your thoughts. It's John here from Infinite Arcade. Dan, I'm going to put you on the spot. It's great to hear you're all bullish on GameFi. My question is around innovation in distribution for Web3, because you made this point, Dan, which is right, which is I love what you're doing at YGG around kind of sub-DAOs, and you mentioned the point about community and beef and et cetera. And I had this chat with your team this morning, right? We're already seeing like feedback, hey, like in Japan they like these games, in Thailand we want these games, whereas in Web2 distribution it's just about the App Store, right? Just put it in the App Store, localization, off you go. So a bit like we've seen OpenSea, Magic Eden, and now what Justin's doing at Fractal, into the gaming on Solana, there's Few and Far coming on near. What are your thoughts, or what are you looking for around innovation in GameFi distribution?
So it's an interesting question. We've actually backed a project that I won't name right now, but is solving this by empowering UGC, like user-generated content, in that they're providing like base layer content, base experiences, and then with these building blocks, the players, the content creators in specific regions can tailor and create experiences that's very bespoke to their local like tastes, and then they're rewarded for doing so by sharing in part of the NFT sales, the tokens that are generated in playing these games. And so I want to say this is that big of an innovation, but what it allows for is very discrete experiences tailored to specific subsets of communities. And this is why like just content creation is like the last 5 years has really taken off. That's why like TikTok is such a huge thing, is people get to be themselves and create an experience that they think other people will like out there. And then very quickly you'll find out if there is a community that likes it, enjoys it or not. And when you do get a community, that stickiness is very, very high, and then you're able to monetize it very effectively. So I think there is some innovation around this, because through Web3, if you create the right platform and ecosystem to encourage this, and then empower content creators out there with UGC tool sets, and then help entice these content creators to come on the platform and create for their followers, viewers, their own gamer sets or communities. This has the ability to then take the onus and responsibility of creating unique experiences for every single region over and over again, which is not that scalable for a game studio, and put it directly in the hands of people that probably know best, right? That know the community better than a centralized studio. So
I'll actually jump in on this. I was asked by the Google Games leadership team in North America to come in and talk with some other VCs about some of the biggest needs in gaming. And I think for Web3 gaming in particular, like user acquisition is the biggest opportunity, period. I share Adrian's view that there's a place for kind of tokenomics. However, the over-reliance on Ponzi-nomics is a result of UA not being available for Web3. So being able to target high-value customers and present them with media that would encourage them to click, you know, whether it be through the business that you folks are creating or the business that Dan was just talking about, I do think there's an enormous sea of opportunity there. If you look at the income statement for a game company, like marketing spend on a calendar basis is roughly 30% of revenue, which means, and that's roughly true for Web 2 or Web 3 game companies. That means like in a category that's, you know, 40, 50 billion in revenue expected to be trillions once decentralization, metaverse is realized. You know, it's 30% of that number. That's how much that opportunity is. So I think one of the key things for going mass market on Web3 gaming is UA, ironically, and advertising.
Paid UA just doesn't really exist in
Absolutely
Web3.
does not.
And that's actually
if you think about the App Store, if the App Store didn't have UA, it would be so much smaller.
Yep, absolutely. And that's actually why a lot of the projects that we've backed recently are from seasoned Web 2 studios that are very, very well versed in go-to-market publishing and user acquisition, because there's a lack of very solid Web 3 specific UA platforms or tools or services that they need to figure out somehow how to create that themselves using their existing Web 2 audience. And I think that's a very, very, very powerful skill because it just doesn't exist for Web 3 yet.
Yeah. That's a good question, really good question. One of the big opportunities we haven't talked about. Are there any other questions from the group?
Hey, I'm Jason from Yummy Games, founder in the Web3 gaming space. So I kind of wanted to, I guess, kind of go back or kind of elaborate more into what you were just saying, because Andrew, I thought what you were saying about how that I thought it was very interesting that you were saying that that there might be a trend towards going back away from free to play into more of like a a line model, and that Web3 might kind of solve that. And then you're just talking about how UA is an issue, but I'm kind of curious how you think about this, because a lot of the Web3 games are gated by expensive NFTs, and that's why potentially user acquisition is a problem, because it is actually really hard to get into get into the space. And of course you have guilds that help with that a little bit, but at the end of the day, I mean, free to play is and the user acquisition around free to play is why a lot of these games are able to really grow and become really big. So kind of wondering how you think about that, because you were there is a problem with UA. At the same time, you're kind of thinking about that maybe the models might change. Yeah.
That's an awesome question. Thank you for that. So my personal view, take it with a grain of salt. There are a lot of smart people in the room that probably would disagree with this. One of the hallmarks of this last bull cycle is there was a push to avoid regulation. And one of the ways that you avoided regulation was to commingle use cases across stakeholder groups. So for example, you would have your governance or utility token, have speculators, investors, and gamers all buying it, right? The challenge with that is, if the speculators manipulate the price of the asset, the token, or the NFT, they'll benefit from that speculation, but it impacts gamers that have invested in that ecosystem in a way that they didn't anticipate. And so it creates kind of misalignment of goals. All of which is to say that, like, when you commingle these use cases, and you gate it behind like a crypto wallet adoption step, you end up with money being raised to not just build a game, but also to promote the game and also to sustain the treasury of assets and tokens that feed that economy, right? So, in other words, like, if there's a stumble, then that entire kind of thing unwinds. And so my personal view is that if you start to segment the use cases by audience, which is kind of a more classic game design principle, right? Like you don't force casual players to play a very hardcore mechanic, right? But if you can segregate the speculators and you can segregate the gameplay into NFTs and tokens that are potentially not even overlapping, then you start to unlock the benefit of ad targeting. In other words, you can present more mass market, more affordable, more accessible gameplay, even if it's gated behind a wallet, and start to get to paying user percentages and overall revenue that allow you to actually do media buys with a effective CPM that is below your revenue per user. That's like skating over a lot of really complex stuff really fast. I apologize to the audience that might not be working in games or around games, but the net thing is in games, and especially with crypto games, you have a very small number of people that are spending a fortune. And if you can't target those people very precisely, then your marketing spend is inefficient or even unprofitable. So the way that you fix that is you get more people to spend. By virtue of getting more people to spend, they spend less on average, right? And the only way you can do that is by making the gameplay more mass market. So that's kind of another way of saying what I said. So that's my view. But that's like very complex and sophisticated choices that you have to make in very dynamic, closed ecosystems in the context of a Web3 game economy. It's not something that I think people will stumble into without a lot of conviction. Yeah, no problem.
Hi, so I'm currently working for a startup and we're raising a round right now. So I have a question about, as investors, if I can pick your brains. So as we've been going through and talking to a lot of VCs, we're getting a lot of, questions about retention versus monetization. And it's kind of like, it seems like you need one or the other. Obviously both would be lovely, but I'm just wondering as investors, other than, the generic idea of the project and the founders and, you got to make sure you get along, you like the idea, is there more of a path that you see, especially right now, towards investing? Like, are you more interested in companies that monetize or companies that are able to raise that retention if it's an if-or?
That is a great question.
Very good question indeed. I spoke to many of my other VCs around me, and some of them changed the requirement to say you need to be generating revenue first before you invest in deals. Like, how is that even possible for a crypto startup? So I find that very interesting. I would say in the Asian way, they're just using an excuse to reject you because they are not liquid enough to invest, maybe. Because it's a chicken egg thing. And the whole part of why we are in crypto is because it's a decentralization and user acquisition model that people put their money in to be part of your project. And this is why all of us require to see real organic community in your project before we put money in, and any exchanges when they do due diligence, they need to see organic users. And that's part of the strict due diligence that if you have no community, no one will list your project, right? So I think that's where most of them, they're not so much into customer acquisition, will move into a decentralized exchange and list the project anyway, if they can create a real utility of the token. And after they prove that, the centralized exchange will again re-evaluate your application for listings. So for investors, why would we invest in a project that's never getting listed into a centralized exchange? If you kind of pass the centralized exchange due diligence, it means a lot of red flags. So I think that's where I hope I'll answer the question where, yes, we do need to see real adoption of the product that you came up with in the project. At the same time, we want to see organic, adoption and organic growth over a period of time. And that's where we value that, project more. And we even follow up to invest more if we see a good growth in that project. Do I answer the question about that part? Thank you.
What do you guys think? Engagement or monetization?
But I probably have a different view from Rico. I think for any VCs, if it's early stage VC, telling you that asking you on retention versus monetization, they are not the investors that you should talk to. because I don't think any early stage project have, if you are doing the first round of fundraising, how are you going to retain your capital or to monetize your capital at the very early stage? How should a VC be expecting a product from you and making revenues? You are just talking to the wrong person. And the requirement that a VC is asking retention versus monetization is a round A opportunity, that you are probably going for pre-A growth, pre-A product ready, testing out the product, and go for round A, testing out again. So I think that is probably wrong investor. But my critical advice is two things. Actually, the first one is not talking to investor now. I'm not saying that you couldn't fundraise, but I think it's actually the best time now to talk to other stakeholders in the ecosystem. The reason for that is, say, for example, when I look at a project, he should be able to strike 10 partnership now much easier than in the bull market, because you go to any other top 100 protocol in bull market, they'll be spending treasury like tons, billions of dollars, but now they're down by 90%. You can easily strike a partnership. So go to FTX now, go to whatever exchanges now, talk to them, strike a partnership, go back to VC and say, hey, I got this. If you're asking for the product, screw it. Why would you have a product without fundraise? And second is, I think you should drill in the token economy. And that's the bull market kind of dies now. Part of the reason specific crypto is because of the crash of Luna and also the crash of GameFi in terms of play to earn as a part of the reason. And both of them attribute to the token economy. And as a founder, if you understand a lot about how the token mechanism should be designed, I think I will value you much more than others. But I'm not going to ask you on the product how you spend your finance. I mean, I probably ask you how you spend your finance, but not how you retain your finance, because you should be a poor entrepreneur now. That's why you need to fundraise. Why if you need to fundraise if you're super rich?
I should mention that the company that I'm in now is we are doing a C+. So we do have a product app, and we're kind of finding a balance between like, do we want to retain people more, and do we want to make sure that we have the most accessible product for everyone to use? I don't know if my mic is working, but or do we want to?
Or do we want to like make sure that we're monetizing the people that we have to the fullest extent? And that's kind of more of the idea.
I mean, if I were to connect it to things that were said earlier by the group, you know, I think what they're saying is the questions that investors ask kind of reveal what type of partner they'll be once they are invested in your company. And so I think Adrian's kind of saying you should, even in a bear market, you should be confident to say no, just by virtue of what type of questions you're asking, you're not a fit. But I think the converse of that is every one of the investors here has kind of expressed that they're looking for either data or metrics or even a roadmap that shows a connection between your vision and that there's true value being created for your audience. And if you can speak to that and speak to that as specifically as is appropriate for where you are in the process for UC+, then the right investor will back that.
Yeah.
And it could be project financing, it could be platform support, or token funding.
Yeah, I feel like no project should change the visions or cater to investors in this bear market because of the financials. One way, there's multiple ways that you could adjust for financials. You can negotiate with your employees, not firing them, but to adjust the package based on the token and fee split. And that's how some of the portfolios do. And obviously to adjust the financials to, you're not going to spend tons of marketing dollars in this market, right? To tilt towards development and, you know, potentially might fire some people, but that's sort of
Hopefully not.
That's sort of base. You just don't change your vision in this bear market just because investors ask for that.
Yeah.
Just to add on that, I do have portfolio companies that actually redirect their focus into non-crypto community, to onboarding more people to use the product, and you even paying with fiat railway to prove that this is a working product that the general people can use before going through a fundraising exercise using crypto. That's where the shift is, and they can still go into the market. if they can raise the funds. I think that is the transition of the project from where you are to the next round. Yeah.
Yeah, and with that, I should stop this because we're a little bit over on time. But thank you very much for the great questions and the engagement. Thank you to the panelists. If everyone could just give them a hand, thank you. And everyone can start their front end now. Thank you.